Welcome to Resilience and Resolve with Lance Drury.
Hello and welcome to today's episode of Resilience and Resolve with Lance Drury, where we break down the complexities of the tax world to make it easier for you to navigate through the numbers and paperwork. I'm your host, Kevin Rosenquist, and I am, of course, as always, joined by Mr. Lance Drury. Lance, so good to see you again. Thanks for being here.
Great to see you again.
All right, so today we're going to talk about how tax collection works. We go inside the IRS. So tell me a little bit about your background in dealing with the IRS and their operations.
Well, I've been involved with the IRS for about 20 years. I don't do a whole lot of cases anymore because I soon will have 14 employees in my employ. We have 1,000 clients. So not only do I do all the initial consultations, which could be about 25 to 30 a week with prospective clients, I also have to monitor those cases with my legal assistants, with my attorneys, with my enrolled agent, and do all the other stuff that's involved in running a law firm. But I worked with revenue officers, revenue agents. I've done every aspect, offers in compromise, installment agreements, audits. So we've done all that, worked with financial statements on almost a daily basis. So I've had a pretty extensive career in tax representation with the IRS.
Yeah, sure sounds like it. You've got a lot of experience in dealing with those guys. So what are some common mistakes or maybe misconceptions that taxpayers have about the IRS and how they go about collecting taxes?
Well, I think one of the biggest mistakes is people think they can do this on their own, and they don't understand all of the complexity that goes into this, or all of the ways, or the tricks of the trade, I should say, on how to get a better resolution for themselves than if they tried to do it on their own. For example, several years ago, I had a guy come to me and he set up his own installment agreement and he was paying $2,000 a month. Well, the first time he hired me, I got it down to $1,100 a month. Well, he had to hire me again because he was paying on the agreement, but he couldn't make his current tax payments because he wouldn't withhold enough taxes from his paycheck. And I tried to tell him that and he wasn't listening. So he got defaulted and we got him down to $800 a month. And then he defaulted again and we got the $800 a month reinstated. And finally, after having to hire me 3 times, he woke up and started having more taxes withheld from his paycheck. So he didn't run into that problem again.
Oh, that's funny. Third time's a charm, right? There's a saying. Right. It's a saying for a reason, I suppose. So let's go through the process here. If you could kind of go over how the IRS tax collection process works.
Well, they will not call you up. The first thing they're going to do is send you a notice. And the first notice is the assessment notice showing that you have filed your return and this is the tax that's owed. And here are the penalties and current interest on that tax liability. And you never know because they're a bureaucracy. There's no rhyme nor reason always to what they do. Then if, you don't do anything about the problem, eventually, although you never know when, they're going to start the levy process. There's a whole sequence of letters that the IRS has to send to the taxpayer before they can levy the taxpayer. In 1998, prior to 1998, the IRS could go out and just file a levy without any prior notice. They can't do that anymore. Bill Clinton and the Republican Congress got together and they had safeguards for the taxpayers before the IRS could do that. So now there's a whole sequence of letters. And when they get to the last one, which is generally an LT11 letter, if you ignore that after 30 days, they can levy you. However, within that 30-day period, and even after, if it's in the automated collection system and not a revenue officer, you can stop the levy, buy yourself at least 6 months and get an appeals hearing. It's called a collection due process hearing or an equivalency hearing. And that gives you enough time to get your ducks in a row, to see what your client's ability to pay is, to work something out before they levy the taxpayer. And once you have an agreement, and once you pay on that agreement, and you stay 100% compliant moving forward, they're not going to levy you.
Okay. And you brought up something that we talked about a little bit on the last show too. It's always good for everybody to remember that they're not going to call you.
Not initially, no.
Yeah.
They're going to send you, and you can almost bet that it's a scam if somebody is calling you. And so, yeah, you need to keep that in mind.
Yeah, if I had a nickel for every time my parents were like, "Yeah, I got this weird call," like, "Mom, don't give anybody any money. Do not give anybody any money."
Right.
What are the various collections actions the IRS can take to recover unpaid taxes? You mentioned levies. What else is there?
Well, they can garnish your wages. They can take 100% of your 1099s. They can empty your bank account. They can take 15% of your Social Security. But guess what? If that Social Security check is deposited directly into your bank account, they can take 100% of it. And then the other thing is seizures. Now, I've not had a client in my almost 20 years of doing this had their home seized. I had a guy once, they were going after the home, but he sold it before they did that. But if you just blow them off and you have no other assets or income to pay them off, they're going to go after your home to pay off the debt, particularly if you're well into six figures in terms of what you owe them. They're not going to do that if you owe less than $100,000 to them.
Okay. All right. Well, that's good to know. We talked about tax liens a little bit in the last episode, but could you once again talk about what exactly a tax lien is and how it affects a taxpayer's property and like overall financial situation?
When the IRS files a tax lien, it's filed with the Recorder of Deeds office, generally in the county in which they live. Sometimes they have a post office address in another county, so it's should not attach to their property, but these title companies are so scared of the IRS, they're making clients satisfy liens that don't even attach to the property. But anyway, the way it affects is it's not a seizure. But if you go and sell your house during the time that the IRS still has the right to collect against you, that lien has to be satisfied at the time of the sale of your house. So that's the primary way. Now, since about 2018, that is not supposed to show up on a credit report, but it does affect your ability to get a loan lots of times. Most of my clients, once they have a lien, they're not going to get a loan to pay off the IRS because the bank's going to have to take their loan subordinate to the IRS's lien. So that's the biggest effect it has on their financial situation.
What about other assets? Is there other, you mentioned garnishing wages and stuff like that, but are there other assets that they can come after?
Theoretically, they can go after any property that you own during the time the lien is filed or any property acquired thereafter, but you're not going to see them go after vehicles or whatever. I did have a client who owed $1 million to the Missouri Department of Revenue, and just to scare him, they went out and seized his vehicle, but he didn't have any equity in it anyway. They didn't get anything, but they were just upset that he had blown them off for so long that they just wanted to get him upset for a little while. But you're never going to see the IRS go out and spend their time and money going after a motor vehicle.
What about financial assets?
Now, if you're in the automated collection system, they're not going to go after your retirement.
Okay.
But if you owe enough money and you get a revenue officer involved, they can go ahead and levy your 401ks. But it's interesting. We have a revenue officer on a case now. The guy doesn't have enough money to pay him back. He says, yeah, but his wife's got this big 401k. I'm going to levy it. That was a year ago. It still hasn't been levied. So, they got to go through a bunch of hoops in order to do that. But yeah, your retirement, if you have a federal pension in addition to your Social Security, they can take 15% of that. They can intercept your refunds, even if you have an agreement set up. So I tell people, you got to pay enough in, but don't pay too much because they're just going to intercept your refund. So even if you are set up on an agreement, they are going to intercept any refunds you have coming from the IRS or from the U.S. Treasury.
What about like personal investments of, whether it's in the stock market or crypto or any of that kind of stuff? Can they come after that too?
They can obviously go after stocks. The automated collection system is not going to do that in all probability, but revenue officers will invest the time to do that. Generally, the cases that revenue officers get are high dollar. They're mandated after, I think, if you owe more than $250,000, the automated collection system has to turn that account over to a revenue officer. And they're much more aggressive in terms of levying different types of assets than the automated collection system.
What about, I was curious about like crypto, Bitcoin, stuff like that. Will they go after that?
I haven't seen that yet, but we don't have a whole lot of clients. They do have that listed.
They do
now on the financial statement. Years ago, that's of recent vintage. They've only done that in the last few years. So I would say theoretically, yes, but I don't think the automated collection system is going to do that. It would be revenue officers who are more likely to seize the crypto.
Yeah, you'll probably, I guess, as crypto continues to rise and digital assets continue to rise, you're probably going to start to see that more. There's any way they can get paid, right?
That's exactly right.
Yeah,
that's exactly right.
Do you have any crypto?
I have some, but not much.
Me too. It's not a lot. It's not doing the best.
I'm mostly in the stock market, and I'm getting ready to acquire property overseas. I think there's a lot of real estate developments overseas that are better than opportunities here. Getting ready to do that just to diversify my portfolio.
Love it. Love it. Tell me what rights taxpayers have during the IRS collection process, because I'm sure a lot of people listening to this show are either in the middle of something or have gone through something before and maybe are trying to Google their rights and are getting confused. Give me the simplest way to say, okay, these are your rights. Don't forget these.
Well, there is a taxpayer bill of rights. Frankly, I don't remember all of them because if you have a revenue officer, they're likely to violate those bill of rights anyway. For example, one of the biggest is, and this just kills me, is that, and I've had to go to their superior, once they have a power of attorney, once they have an attorney, they're supposed to talk to the attorney, not directly to the client. I want my client to be as far away as possible from the IRS as they can possibly be. And guess what? You get some renegade revenue officers and they try to contact the client directly.
Sure.
And they can't do that. So I have to call them out on it. I have to get a hold of their boss because they're just violating the attorney-client privilege when they do that.
Why do you think is it just trying anything? Like, why are they knowing?
Yeah, and it's not a high percentage of revenue officers that do that.
Sure. Yeah.
In fact, it's pretty low, but you always got your renegade revenue officers. When I was a public defender, we hired ex-police department, sheriff's department investigators, and they would talk about the investigators and the cops who were renegades, who would plant evidence on people. So, you're going to find that in any profession. So sure. You're always going to find bad apples somewhere.
Yeah. What other rights can you think of? I'm not asking you to go back in time and list them all out, but what other things do you think that people might not realize that they have a right to do or say during this process?
Well, I don't think they understand that they have the right not to talk to them. Now, if they ask for documents, financial documents, and most of them are relevant, they're entitled to ask for those, but they do not have to talk directly to the IRS. They have the right to a practitioner, to an attorney, to an accountant, to a enrolled agent. An enrolled agent is somebody who has taken a test to be federally licensed to practice before the IRS. They have the right to a collection due process hearing or an equivalency hearing before they can levy them. Years ago, they did not have those protections. And they just have the right to have a reasonable time frame in order to submit documents, although generally with a revenue officer, they want everything. They want it now, like in 3-4 weeks' time. And it's a lot of financial information, 6 months bank statements, all kinds of pay stubs. And then guess what the revenue officer does when they get all that information? They sit on it for 3 to 4 months, if not longer.
I probably should have guessed that.
But we have to hurry up because we can't play by the same rules they do, because sure. If they don't submit that paperwork in their time frame, and of course we can get extensions on that from time to time. That's not usually a problem, at least for one extension. But if they don't, then they put on that paper, that summary of taxpayer contact. It's Form 9297. They will put that one of the consequences of not handing over those documents is levies and seizures. And here's the other reason why people need professional help. People come to me after they've been levied and they were working with a revenue officer. And they go, I turned over everything they asked me to turn over. And when we get involved, we find out they didn't turn over everything that needed to be. And it's not that they did it willfully. It's so confusing, so complicated for the average taxpayer that they don't normally understand what's going on when they deal with the IRS themselves.
I was going to ask you that too. Like we've talked about on the show several times about how dangerous it is to try to tackle some of this stuff on your own. What was the threshold again? Like 10,000? Over 10,000?
Because of the fees that
Yeah.
I charge, because it's the same amount of time.
Sure.
It's not worth their while to hire me if their liability is less than $10,000.
Okay, got it. Yeah, that's what
I get people that owe $1 million or more.
Yeah, that's a lot.
That's hard. That's hard to do.
Yeah, that does seem like it'd be hard to do. You know, when someone comes in and tried to handle it on their own versus if someone comes in first thing, is it way harder for your firm to try to right the ship that has kind of gone astray on because of that, or is it kind of the same process?
But no, it can be harder once a levy's in place to get it lifted, depending upon who the revenue officer is. But I got to tell you a story. There was this business about an hour from where my St. Genevieve, Missouri office is situated, not far from St. Louis. And they drove down to see me. Well, in fact, it was a telephone call with their accountant. And I thought they had probably heard me on the radio. I don't know how they got my name, but they had hired a firm out of Colorado. Paid them like $30,000 over a year's time. And because it was one of those big firms, they dropped the ball and they'd say, we need this information, but we need it by this afternoon, when they probably had it for 20 days from the RO, the revenue officer. And so they dropped the ball and they got levied. And one was $1 million levy, I believe. So we thought, well, they've really blown them off. We didn't know what we could do. Well, they came down the next morning, gave me a big fat check, and that was at 7 o'clock in the morning. And before the day was over, we got both levies lifted. And because we were working with a revenue officer, they want to work fast. So we had to spend all this time, but in 30 to 45 days, we had both of their tax problems resolved, and they were ecstatic, and they paid me a bunch of money. And they're not going to pay anywhere near the full amount back. But they were so happy with the results that they got. And you got to watch who you hire, because there's a lot of people out there that don't want to do the work. This is why I work every Saturday and Sunday morning. And I used to work every Saturday till 3:30 in the afternoon. I'd say 3 out of 4 Saturdays, because I just had to do it. But when I turned 65, I quit work until 3:30. Now it's only noon, 1 o'clock. Well, tomorrow I have an appointment here in St. Genevieve. Then I drive to my St. Louis office, which is an hour away. I may have somebody up there to see. I have to pick up documents and that. And then Sunday, I fly out to my San Antonio office.
Oh, I'm just going to be watching football.
Well, I'd rather fly to San Antonio.
Well, thanks for tuning in to Resilience and Resolve with Lance Drury. The website to get in touch with his firm is lancedrurylaw.com. And don't forget to like and subscribe to stay up on all things tax law. Lance, always great to chat with you, man. Good to see you.
Great seeing you, Kevin. Take care.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.